Hi, everyone. This is Tim Melvin coming to you once again from Central Florida on a beautiful sunny Father's Day afternoon down here. And the stock markets broke their winning streak this week. They actually are down about 2/3%, with the worldwide markets, as measured by my favorite indicator, the URTH MSCI Index ETF Fund, is down a little over 1%. The bright spot this week, surprisingly, was Brazil, as every poll shows the president losing ground down there. And they hopes that she will not win, or at least be forced to a more centrist pro-business position, has been rallying the Brazilian markets for the past couple of weeks. Anyway, we've got a real mess out there, folks. Iraq, as we all know, the insurgents have taken some ground. Government troops have dropped all of those lovely weapons and uniforms that we purchased for them with U.S. tax dollars and run off into the hills. Now, today it looks like the government forces are trying to make a stand, along with a large portion of the populace that has signed up to help offer resistance to the Islamic separatists, who seem to be determined to building an Islamic caliphate across much of Iraq and Syria. And the U.S. has moved some aircraft carriers and some other ships into the area. So it's going to make for some interesting times. And of course, the Ukrainian situation, which we haven't heard much about, got even worse this week as the separatists shot down a military plane with about 49 folks dead. And the Ukrainian government's not happy about this and has promised to treat them as terrorists. So got a lot of geopolitical events that could roil the markets in the weeks ahead. So far, the worsening geopolitical situation has not been able to trump the monetary easing situation. We'll see if that changes at any point in the near future, but it should unfortunately be a rather interesting week in the geopolitical side of things. So still, stock prices are, after a down week, are still less than 1% off all-time highs. You had the ECB lowering rates not too long ago and going to negative rates in some situations. China lowered some bank reserve requirements over the next week. And of course, the U.S. interest rates continue to be very low. You've got a situation out there where the Italian and Spanish government bonds are actually yielding yet less than U.S. government bonds, in spite of the horrible economic situations in those countries. So as long as they're printing money, the path of least resistance seems to be up. We'll see if that ever changes. The Barron's Mid-Year Roundtable was out this week. That's always one of my favorite issues. I love reading what these guys have to say. I ignore it for the most part, but I do love to read it and kind of think about it a little bit. The consensus seems to be that stocks are not egregiously overvalued, but they're not cheap either. And that's kind of along the lines of what I've had to say for the past several months. It's not a cheap market. It's on the high side of fair. You can find a few things to do out there, but not a lot. This is a good time to be sitting on your hands. If you've got new money to put to work, I recommend that you don't, except for in a few very specific situations. So all of the panelists pointed out that there is no revenue growth, that most of the earnings growth, because the forecasts for earnings growth were between 6 and 10% from the panel of experts, but all of the growth is going to be driven by acquisitions and stock buybacks, both of which are going to be paid for with either overinflated currency in the form of stock shares and some of the buybacks, or, of course, very cheap debt to buy back stock. I'm not sure this is a great idea, that these massive stock buybacks at what I consider overvalued prices funded by debt is going to turn out to be a great idea, but it is temporarily driving earnings higher in the short run, and that seems to be all anybody cares about these days. Felix Zulauf, of course, was, as always, the most bearish of the prognosticators, and he sees a correction coming of more than 10% sometime this summer. We've heard that from a bunch of folks. I don't know if it'll come to pass or not. Certainly, with as much cash as we have in our newsletter portfolios, I would absolutely love to see it. We'll see how it plays out. Fred Hickey is predicting higher gold prices and lower stock prices. Boy, do we hope he's right, given the amount of silver miners that we own, which of course will go up along with the gold miners. And as I said, we would love to deploy some of the cash that we've been hoarding all of 2014. I had a conversation with a friend the other day about the trade of the decade in small bank stocks. And he was like, Tim, not all of them are going to get bought, are they? And the answer is, of course not. A lot of them will get bought, but not all of them. There's two other possible outcomes that I see for some of these small bank stocks that we're buying at a discount to book value. Some of them, those located in smaller towns across the country, are going to become what I call fortress banks. And when I was a kid, there was one in Annapolis, Maryland by the name of Farmers National Bank. They just dominated the local scene for decades. They had the majority of the commercial and business deposits. They cherry picked the loans that they wanted. They knew everybody in town. They knew every project in town. They knew what they should invest in and what they should not invest in. And they just dominated the marketplace. I don't know too many people that grew up in Annapolis, as I did in the 60s and 70s, did not open their first savings account at Farmers National Bank. It was a fortress bank that dominated the market. And some of these little local banks are going to accomplish exactly that. In the smaller towns and communities across the country, it's going to be much easier for them to take market share away from the bigger, very unpopular banks. The local approach will work well. They will have going forward very high returns on equity. They usually do a great job of growing profits and dividends at an above average pace. And if you're lucky enough to own stock, especially if you bought it cheap below book value in the aftermath of a crisis such as we're doing right now, in a fortress bank, these things literally can make you a millionaire over a couple of decades, starting from a very small base because of the magic of compound growth. So some of them are going to go that route. We've got several in the portfolio that are small town banks that I think have that potential and possibility if they avoid being taken over in the short run. A couple of them are going to be serial acquirers. This strategy worked very well in the aftermath of the S&L crisis, in the aftermath of the internet blowup, and we saw banks like Susquehanna Bank shares and BB&T and Nations Bank all the way through the 90s, just buying virtually everything in their path to expand their footprint, grow their asset base and their earnings. And then, of course, they all turned out to be wonderful, profitable stocks as they continue to grow via smart acquisition. Some of the banks are going to go that route. Capital Bank Financial is a serial acquirer. They were formed in 2009 by some very smart guys to take advantage of the fact that bank prices were very cheap. They did some FDI assisted deals. They did some straight up acquisitions, and they're growing a very nice bank down in the southeast portion of the United States. The symbol on that CBF, and on any kind of pullback, I would suggest that if you're a really long term investor, you probably want to pick up a few shares of that. I think Home Trust Bank out of the Carolinas and Virginia, they just bought one of our holdings from us, Jefferson Savings, and we've kept the stock because it's only trading at 80% of tangible book value and actually added to the position a little bit. I'm giving one away there. But I think they're going to do a nice job of expanding their footprint both up north into Virginia and south into South Carolina. So they'll be a serial acquirer that I think you can buy cheap. They'll also do very well for long-term holders. And Independent Bank Group down in Texas, they haven't yet found anything that they don't want to buy. They're buying everything in their path. I think they'll continue to do so. It's not a particularly cheap stock, but if you ever got a chance to buy it at a discount, I think that they are going to grow and become a major presence in the Texas banking market. So the serial acquirers will do well. The fortress banks will do well. And a lot of the serial acquirers are going to grow up and reach a size that's a critical mass, and then somebody that's larger, a BB&T, a Susquehanna, is going to say, "Hey, that's a nice franchise you've built. I think we'll buy it." So you're going to see a lot of that type of roll-up activity over the next 5 to 10 years, and it's going to be extraordinarily profitable. And again, I say this all the time: I don't know why everybody is not investing in this trade of the decade in the small regional and community banks. Even if you're just putting your excess trading profits into these things in your IRA, it's going to make you an enormous amount of money. And I strongly suggest that you consider adopting this strategy. Anyway, looking out at the broader market, still just not a lot of inventory creation going on. I sat down this morning after we got back from my fabulous Father's Day breakfast, and just ran a screen looking for some cheap stocks that have decent balance sheets that have dropped in price over the last month and might be newly created bargains. I looked globally first, given all the geopolitical tension, and there's 52 stocks that have dropped in the last month enough to reach what I would call bargain levels. They are all gold or silver miners, with the exception of Resolute Forest Products, a stock that I have talked about quite often in the past. Forest Products Company trading at 53% of tangible book value. Now, they dominate the newsprint market, which it's a declining market. Let's face it. Who besides me actually reads 2 or 3 newspapers a day these days? Um, but you know what? I'm still here, and there's folks like me, and there's community papers, and it may be a declining market, but they absolutely dominate it, and the market's not going to disappear over time. They also have a very nice wood products and a pulp business that should eventually prove to be worth a lot more than the current market price. But that stock is down, but it's one of the few that has dropped back into bargain levels outside the US in the past month. In the United States, only 30 stocks have dropped in the last month to reach now bargain levels. There's only 7 over $100 million market cap. Largest, of course, is a silver miner. And when I look through it, I already own most of them. So these are just stocks that we started buying a little bit higher that have, as all of my stocks tend to do, come down in price before eventually recovering. So it's just not a lot of new opportunities to put money to work. If you've got new money, this is a great time to build your cash balances so that you're in a position to react when the market actually creates some new inventory. Have no idea when that will be, but you want to be ready when it does finally happen. So, the kids are home, as you can tell by the dog barking in the background. Sorry about that. And the week coming up, we've got my Baltimore Orioles are playing 500 ball. I'm getting ready to go spend some serious bonding time on the couch to watch them play the Toronto Blue Jays. Then they're coming down here to Tampa, hoping to sneak over for a game this week. And then the Yankees in New York, which is always a lot of fun to watch. A lot of great baseball going on there right now, guys. The leagues are very close. All the division races are close enough to keep it interesting. So hopefully you're a baseball fan and you're enjoying this as much as I am. Not a lot on the book front this week, but there is one collection coming out that if you're a Game of Thrones fan, you're probably gonna want to read. George R.R. Martin, who wrote the original books, has put together a collection of stories, including a new Game of Thrones story, by several authors. Joe Lansdale has a story in there, Neil Gaiman, a bunch of other folks. It's called Rogues, and it's just about all the bad guys from that sword and sorcery type setting. Should be a great collection of short stories and novellas if you're into that kind of thing. On the business book front, just not seeing much coming out, guys. As I said, Guy Spears has a new book coming out in September, The Education of a Value Investor. I'm really looking forward to that. And Tobias Carlisle has one coming out in early September as well called Deep Value. And Tobias has done some great work. We've had some fun conversations in the past couple of weeks about some of his work and even flirted with a project or two together. That was fun to do. And his book's going to be called Deep Value. It'll be pretty exciting. Now, there's not a lot coming out in the book front, but there's a few things. So if you're looking to broaden your knowledge base as an investor, let me give you a couple books that I really think that you should probably consider if you have not already read them. First is Tobias's Quantitative Value Investing, fantastic book. Victor Wendell's Net Current Asset Approach to Investing, which looks at the history of investing in stocks trading at less than 75% of net current asset value. Fantastic book, solid information. Value Investor by James Montier. If you've never read it, you absolutely should. One of the best books written on value investing in the last 20 years, in my opinion. And then the biography of Peter Cundall, entitled There's Always Something to Do, is a great read full of fantastic information on discovering and valuing safe and cheap stocks. So if you've never read those four, there's a little pool and beach reading that can also help make you some money over time. Now, coming up this week, it's going to be a very busy week, by the way. We've got the IMF review of the U.S. economy on Monday. That should be mildly interesting to see what they think about us. Monday is also the deadline for the Ukraine to start paying the Russians back for their natural gas bill. We'll see if they're able to do that, if Russia's happy with the price they're willing to pay and the schedule on which they're willing to repay it. The situation is a little dicey over there, so who knows what's going to happen with that. We have May housing starts coming out. Could be a market moving number. If the housing market did not see some fairly robust activity in May, we could see a negative market reaction to that because everybody's banking on this strong housing recovery to drive the economy going forward. As you know, I'm very skeptical about that, so I'll be watching that number with some interest. We have the FOMC meeting this week. The Fed's going to get together and chat about things, set some monetary policy. I don't think that it will be anything horribly different than what they've done at the last 4 or 5 meetings, but everybody will stand around from now until Wednesday waiting to hear the announcement from on high. Then, of course, Janet Yellen is going to give a news conference, which is always pretty much high comedy, but potentially market moving. So you're going to have more World Cup this week than you can stomach unless you're one of those great World Cup soccer fans. I am not. I'll try to avoid it as I have so far this week. It's going to be difficult because it's everywhere right now. Anyway, it is Father's Day. I'm off for some quality couch time. Going to do some reading, watch a little baseball. The kids just came back from the pool. Lord knows what they're going to get up to now. But the wife has got the big green egg out and is smoking up some ribs. And I got to tell you that one of the biggest advantages of being married to a Texan is they know more about barbecue and smoking meat than anybody else. And the rest of us are never going to be able to figure it out because we're not from Texas. But she's whipping up a nice Father's Day dinner. I'm looking forward to it. And I will talk to you guys next week.